But I think, Prashant, you were talking about shipbuilders. Let's stick to that theme. Let's talk about shipping, another ancillary out there.
No, absolutely. And, it's an industry which is, of course, it's got its own ebb and flow, but I think there is also a lot happening on the global side with regards to sort of conflicts. Always comes up as a sector to look at from a broader perspective as well. Let's focus on the space now. And Trump's tariff trade war is, of course, getting more entrenched, if anything. The good news seems to be behind, and now we are, I guess, entering a bit of a more tougher sort of a space. Remember, those 50% tariffs on steel and aluminum go into effect. That order has been signed. And there was that Wall Street Journal report which said that China wants to play hardball. They're not going to sort of lay down and let the Trump administration do what it wants. So a more tougher, contentious kind of phase with regards to what's going on here. We have Mr. Shivakumar. He's Executive Director and CFO at GE Shipping. He's with us now to take some questions. Mr. Shivakumar, good to have you with us here. Thank you very much for your time. I just wanted to, before I get down to GE Shipping, I just wanted to get a quick sense on, some of the bigger stuff. From the last time we spoke, have things changed in any which way? Also weigh in on these steel and aluminum tariffs. Will that make a big difference to the shipping business, the bulk business?
Yeah, morning, Prashant. Thanks for having me. Not much significant change on the commodity trade from the tariffs from the last time we spoke. Steel could be affected. Yes, again, it's a small part of commodity transportation, especially steel into the US. It's not a huge amount. Remember that the overall dry bulk trade is 5.5 billion tons. So it's not a large part of the trade. Aluminium also not a huge part of the trade. We have bauxite, which moves a lot, alumina in a smaller way. But again, unlikely to be affected in a big way here. So not much on the commodities front from this latest round of tariffs. Really.
Not of course, we're not from an India perspective, but I mean, your business is global, Mr. Shivakumar. Even there, not very much in that sense?
Not really. The steel trade is not a very large part, especially the US imports, not much at all. In fact, even Chinese exports of steel are pretty low, less than 1% of overall overall dry bulk trade.
All right. Hi, Mr. Shivakumar. Good morning and good to see you, Ben. So you're basically, if I got that correct, you're saying demand hasn't got hurt by this additional round of tariffs. Is that correct?
Yeah. So it's unlikely to have a big impact. Demand probably gets hurt. I'm just saying it's not going to be significant because it's a very small part of the commodity trade overall.
No, this aside, I'm saying for you, demand on the whole, are you seeing some kind of a slowdown in terms of movement, in terms of conversations that you're having? Leave this aside with regard to the smaller part, steel as well as aluminium. But on the whole, dry bulk, is there a slowdown?
Yes, there is. There is one specific trade which is affected by the tariffs, which is the US-China grain trade, because China has put tariffs on US grain as well. So that has slowed down significantly while the importers wait for the outcome of whatever talks are happening between the US and China. So that trade has slowed down significantly. But otherwise, there is not really anything much. I think I'd mentioned the last time I was here that the LPG trade also is affected by this because there's a lot of LPG, specifically propane, going from the US to China. That again has, it slowed down a bit, but I think the trade has rerouted and it's sort of adjusted now.
Mr. Shivakumar, we've been having these conversations with global trade economists, etc. You must have seen the OECD forecast as well, growth forecast, sharp cuts. I spoke with the Morgan Stanley global chief economist, right? I mean, they're all expecting, the markets, of course, when I say markets, I mean stock markets. They're not reflecting it, but they're all expecting a pretty sharp slowdown in the US and as a consequence of it for global growth as well later this year.
Yeah, while we're not seeing specifically tariff-related issues, we are seeing maybe some impacts on overall growth. The oil trade has been pretty weak. We're already seeing revisions in oil demand growth numbers for forecast for 25 over 24. We are seeing iron ore, coal, trade also being weak. Again, those are driven, iron ore is driven in a big way by Chinese steel production. Coal is driven in a big way by Chinese imports and by Indian imports. And again, domestic production in both of these countries also affects it. But in general, I would tend to agree. The oil demand has been lackluster. The demand growth has been lackluster. So there does seem to be some underlying pressure on the macro.
Got it. Okay. All right. Let's talk about pricing then, sir. Could you tell us, for the various segments that you operate in, what has been the pricing change? Say if you compare the Q1 average with what we saw in Q4 or with Q3, how has the trend moved?
As it stands, it's not very different. Again, I'd like to add here that this is traditionally a weaker period for tankers because tankers typically have a strong winter and a weaker summer period. Again, we did not have a strong winter. So markets are marginally weaker in some sectors for tankers. But in general, I would say we're about the same as we were in Q4 FY25 because Q4 itself was not a very strong quarter. Dry bulk, again, is the opposite of tankers in seasonality. Typically for them, March is the weakest quarter and it starts recovering. So we are seeing a little bit of a recovery in dry bulk rates, but not a huge amount. So it's much of a muchness, really, if you take the entire fleet. Not very different from Q4 FY25 as it stands today.
Okay, got it. All right. Let's talk about the smaller part of your business, the offshore business. How has the pricing trends been out there with regard to rigs? How many of them have already been repriced? How many of them are due for repricing? And what is the rough change out there? I recall a few years ago, Mr. Shivakumar, when you used to come, we used to talk about how that business is turning around. It turned around a little bit in the middle, but I want to know what's the recent trends in terms of pricing?
Yeah, so that the story for the last 15 months is that there's been a significant setback. Saudi Aramco off-hired, I think, 24 rigs in the last year or 15 months, which has had a big change in a big impact on the sentiment overall for the jackup rig business. So we had one pricing for a 3-year contract in India for a rig which is coming off her previous contract, the end of calendar 25. That pricing from the last pricing we had for a similar contract in India was in end of 2023, before the Saudi Aramco actions. So that pricing is probably down more than 50% on a day rate basis. And again, this is what happens in tender pressures, where the number of bidders is more than the number of rigs which have been asked for. Where you have to be L1 in order to get the contract, and you have to match L1. So pricing has come down a lot. It's still positive on EBITDA and significantly positive on EBITDA, but it's a huge drop in pricing. So to that extent, the rates are down. We also have 2 rigs which have got short-term contracts. So one is a 4-month contract, one is a 6 to 7-month contract. These are the minimum periods, both of which will go onto contracts by the end of calendar 25. So we chose to keep 2 of them on short-term contracts because we were not very happy with the long-term rates. The short-term rates, of course, are significantly higher than the 3-year contract that we've got.
So how much higher are they, sir?
They're probably 50 to 60% higher than the long-term rates.
Okay, the short-term one. And the long-term rates you said are how much lower?
About 50%, more than 50% lower from the pricing of calendar 23, end of 23.
Got it. All right, Mr. Shivakumar, we appreciate you joining in. Looking forward to chatting up with you, maybe post the conclusion of the Q1 results. But thanks a lot for giving us some color on how you see the industry panning out from here on.